All right. So, purpose of today's call, which is our live chart breakdown and trade review session. Okay. The main goal simply is to just review the week. Okay. Study what the market has done, what it's accomplished, right, and basically just to sharpen our execution. Okay. So we just want to understand how price delivered this week, why it delivered the way it did. Also review some of the homework as well, and just reinforce our good habits throughout our winning and losing trades. Okay, and just cover everything, right? So first thing we do is the weekly price action recap. So here I am now. I'm on the 15-minute chart, right? And we just gonna go back to Monday, right? And just cover how Monday moved. We're gonna look at our levels, how price acted upon midnight price, how we acted upon previous day high, previous day low. You know those sessions, right? Because that's where liquidity lies, right? So looking at Monday, right? This was also known as our weekly open, okay? So this was the weekly open, also known as the daily open as well, right? What did price do? Price opened up very, very bullish, right? Gave us a retest of this fair value gap, and then we kind of got that push. Now, what got us here from this point? Our monthly PO3, right? Notice how on the monthly, okay, we got manipulation, right? So we're looking for this whole monthly projection, right? This is our manipulation. Notice how the 4 hour, right, aligns, okay, with this 15-minute high and this 15-minute low that we put in to start this move. Okay, now what we always talk about, -2 and -2.5 reaccumulation, some type of pullback, maybe even a reversal, and that is what we get right here at this point. We move into -2, -2.5, and we catch this reversal. Okay, here's that fair value gap, that retest, that push higher. Okay, this kind of again gave us first distribution leg. You go right here, right? First distribution leg. Okay, midnight price open here with a bearish candle. Okay, so we're gonna mark out midnight price. Let me see, I got so many on here. Okay, there we go. Midnight price right here. Okay, midnight price here. Okay, so we open up, right? Price accumulates around midnight. All right, right until open, we continue to get this push. What does price do again? Right, coming to -2, -2.5. Okay, what do we come into? Right, we come into a PDRA, a bearish PDRA. Well, just let me see. Bear with me, y'all. It was actually this 1 hour. This 1 hour right here, something that we were paying attention to. Okay, so we come into this 1 hour fair value gap. Right, price gets that rejection from that 1 hour fair value gap around 11 o'clock a.m. and we pull back lower. So all in all, to play out today, and I'm gonna bring up the bias. Let me just go ahead and bring up the bias, because that's another thing that I want to be more hands-on too, because we don't say these things right for no reason. So Monday was the 8th. Okay, so kind of what I said here's what we're seeing today based on overnight context. Okay, Friday we maintained a bearish outlook after the monthly open was manipulated, creating a projection to the downside. Okay, this is this projection to the downside that I was talking about. So we ended last week off very, very bearish. Okay, coming into that -2, -2.5, knowing that we were gonna get some type of pullback or reversal. Okay, we said that price saw a reversal at -2.5 on the standard deviation, which helped produce a bullish weekly open. Okay. Currently, we said that Asia highs and London highs had both been taken. Okay, before market even opened. Okay, and prices around -2 standard deviation, right? Rejecting from a 15-minute bearish fair value gap. So there's a 15-minute gap. This 15-minute gap inside of here that we were rejecting off of. Okay, we were also above midnight price at that time. So what do we always say? We always want to say, right, if we're above midnight price, at before around 9:30, we want to see price trade back to midnight price. Not all the time does it do that, but basically what we're saying is midnight price is always a draw on liquidity. It's always a target that we can come to. Okay, so this 1 hour fair value gap ended up being a draw on liquidity, right, with a nice pullback. And this pullback gave us, right, 441 points. So we're going to go to the lower time frame and we're going to kind of break that down, because it always, again, starts with price drawing to liquidity, right, in which was this 1 hour fair value gap. Okay, we want to see a market structure shift, a CISD, maybe even some type of SMT, okay, saying, hey, price is about to switch, right, and we just want to target what? All right, these lows. And if I'm not mistaken, yeah, we just want to target lows, okay, low resistance liquidity. So our bullish scenario, my bad, our bullish scenario was, okay, and this, mind you, y'all know I always give these biases before 9:30. This one was given out at 9:09 a.m. Right? It was given out at 9:09 a.m. Okay, so let's go over it. Our bullish scenario was we could see price retrace back into midnight price, find support, and continue higher. Okay, in line with the current higher time frame order flow. Okay, we said another possibility is that price simply pushes through the 15-minute bearish fair value gap. Okay, in which we did. This was the 15-minute fair value gap that we were talking about right here. So I'm gonna mark this out. Let's mark this 15-minute fair value gap out right here. Okay, price could push through that 15-minute fair value gap, reach -2 standard deviation, in which we did. Okay, reaccumulate, in which we did, pull back. Okay, and continue higher to complete the upside projection. And what did we do? We pulled back, came back into this 1 hour fair value gap. Now, we didn't fully complete that projection, but we came close enough, right, to get that reversal. Okay, so many ways that we could have played off of it. So let's break down a trade scenario. 1 hour for FBG. We're gonna stay on this 5-minute. Okay, just before 9:30. 9:30 is right here. Okay, so we ran through this 15-minute fair value gap. Okay, so again, this 15, and we came back and retested it, right? So this 15-minute fair value gap was what? It was our draw on liquidity that we came back to. Okay, came back to this 15-minute fair value gap, grab liquidity from here. At this point, again, we came back to -1.5, coming back to this 15-minute fair value gap. Now, this is how we could have played this out, because what would we see? We see the 10 o'clock open. Let me see, 10 o'clock open right here. Okay, this 10 o'clock open, this retest. Okay, and price could have been just a little bit right here below this low. And what could we target? Opposing liquidity, right? So not only that, we could have targeted this high here, in which price came to. Okay, and just this 1 hour fair value gap moving a little bit more up into this. Moving up a little bit more into the standard deviation level. Y'all get where I'm coming from with that? So many ways. I've been paying attention to how market starts to really play out. We really want to start giving market like time to really open up, like 30 minutes, like 10 o'clock. Let's go ahead and get to it. You know what I'm saying? Go ahead and get to it. I wouldn't have did anything different about this day, right? Like I said, we know what price is doing. We see order flow. Okay, even still, we know from last week we ended off very bearish. Okay, I'm not saying that prices couldn't have kept going, right? But we're playing this off of our levels. Okay, so again, we move into -2.5 from here. We're not saying that this projection wasn't gonna finish up. Okay, it's okay for price to jab back higher, and that is what's known at -2 and -2.5. Okay, so literally this was just a continuation play. Literally, that's all it was, just a continuation play. Okay, just for us to jab back higher, right? Retest, draw on liquidity area. Okay, and then what do? We get that reversal at the same point. Okay, so nice catch, nothing bad about that at all. Let's move a little bit forward. Okay, let's go to the 15 minutes. All right, we're still using this 1 hour fair value gap as our draw. Okay, so let's mark out our levels. Midnight price, something we always pay attention to. We love midnight price. Okay, midnight price, paying attention to our sessions, okay? Asia session opened up really bullish, okay? We came into London session, accumulation. What did we see? Manipulation of these highs. We took our previous day high, okay? We took our previous day high. This right here, again, manipulation. Already we have our drawn liquidity. Which was this 1 hour fair value gap. What's next? After a drawn liquidity, what do we want to see? I'm going to test y'all on that. After a drawn liquidity, what do we want to see? We want to see if price is telling us, hey, I'm going to continue or I'm going to reverse. How do we know if we catch a reversal or not? How do we know if a reversal is in play? CISD. Yes, sweep of it. What do you mean, Maya? My bad. I'm trying to keep up with the chat and also the bias thing. But yes, sis, you definitely correct. And so, what do we get here? We get our 15-minute CISD. Alright, 15-minute CISD. And if anything, I know this is a 15-minute, but just looking at it, right, we retested that CISD. If I'm lying, then I'm flying. We came back up, tapped back on that CISD, right? This 15-minute CISD gave us a 1-minute CISD. It gave us a 2-minute, a 3-minute, a 5-minute, a 30-minute. You feel what I'm saying? Like, CISDs for the higher time frame all up in here. Even a 4-hour. I mean, look at this drop. Okay. So, right, back on context, okay? Drawn liquidity, okay? CISD. No, we didn't put in the SMT. That's okay, right? CISD. Where could we have entered at? On this tap right here, right? Stop loss maybe. And I'm playing in terms of we low contract. The market been moving so quick, so we can have a 50-point stop loss risking $150, $200 with 1 or 2 micros, 3. You know what I'm saying? Like, so what could have been our targets? Okay, opposing liquidity, these low resistant lows. Okay, this low, this low, this low. We're trying to get back to finishing off this projection because what? It's a higher time frame projection. It's a monthly projection. Dang right, price gonna go finish it off. Find me anywhere in the market where price ain't gonna finish off a projection. This can't just be buyers and sellers. You can't tell me that. So again, targeting midnight price. Okay, targeting our session lows. Okay, here's London low. Okay, Asia lows. Even previous day low on down. So I'm just saying, like, look at all of this. Oh my gosh, targeting all of that. And what do? We come in and literally dang near finish off the projection. Real nice. Bottom ticked it. Bottom ticked the -4 standard deviation. We finished the whole monthly projection in 2 or 3 days. Yeah, 2 or 3 days. If not less than that, I don't know. But y'all get what I'm saying. Like, it was that quick just because of the volatility in the markets, right? So again, let's get back. Let's read the bias. Okay. Where we at on the 9th, okay? I said last night, price manipulated the daily open, okay? So let me go back to the 15-minute here. Where's our daily open at? Where's our daily open? Daily open right here. I'm gonna mark this out because I want y'all to see this projection. Okay, watch this. Watch this. We manipulated, right? We manipulated this. What do we use? First distribution leg. What do we move into? -2 standard deviation. Bang! That's all we need. That's all we need. That's all we need. So, literally, this is last manipulation leg, y'all. Matter of fact, this is last manipulation leg of the daily open. Okay? That's an example right there. Last manipulation leg of the daily open. Boom. So daily open right there, the daily open for Monday, right, bringing us into Tuesday, gave it out nice. We ain't even need none of that. That's why a lot of times we can be done and take our profits at -2. So I'm asking myself, because this was a great Asia session, we slow grinded that way, right? But we still knew this 1 hour fair value gap could be tapped again, right? It was tapped one time, it can be tapped 2 times, and that third time is a good luck charm. All right, I'm even ready to see how it's gonna tap into it for the rest for when we price comes into it, if it does come into it. But anyways, just getting back on track, right? How could we have played out Asia if we wanted to trade Asia? How could we have played this out? I'm looking at it myself and I'm not really sure. I may have to drop down to my 5 minute. Let me draw down to the 5 minute. Looking at our liquidity to the left, I'm looking at this area right here, right? This drawing liquidity, okay? Our draw was this 15-minute gap. 6 o'clock a.m. Price came into there, manipulated weekly open, right? We created this gap right here. Price didn't come all the way back into it, but still, we could have came off of, again, we're looking at first manipulation. As soon as, honestly, as soon as price broke back above daily open, I'm in there. And I'm probably just below this gap, okay? Because if price has already manipulated, I'm just looking at it in this way. If price has already manipulated the daily open, okay? Not even just before that, price came into this 15-minute gap, respected it. This time, gotta move up into this 1 hour. We playing ping pong, right? We playing ping pong. This is the accumulation before the manipulation, before the distribution that we talk about all the time. So if price gonna play ping pong, let's play around with it, but let's play around with it respectfully. 15-minute gap, we respected it, okay? We already manipulated daily open. We got this fair value gap. I'm in at the break. I'm risking 50 points. Cool. Do what you gonna do. I'm targeting just this 1 hour fair value gap. I'm targeting maybe this high, or maybe we can move into -2 standard deviation, right? Ping pong, boom, and we could have held it all the way into 9:30. We would have been done. Hey, this would have been a nice overnight hold. Letting price do what it do. Holding up into this 1 hour fair value gap at 9:30, immediately hit, and we done for the day. This is 405.75 points, like literally, right? So that's how they played out. But let me see what our bullish scenario said. Okay, so we said price could retrace into midnight. Well, mind you, I gave this out at 9:09 a.m. Tuesday. Price could retrace into midnight price, find support, potentially form SMT. And actually, we did form an S&T. I'm sorry, we formed an S&T on the 1 minute. I remember that day because I called it out. And this is where I had got messed up at. I think that's the day I had blew my eval, and I was just like, I'm done with it. But anyways, we did put like in a 1 minute SMT with this 9:30 candle, right? Let me see. No, I'm tripping. Hold on. Let me see. Price could retrace into midnight, find support, potentially form SMT, setting up continuation to move higher, complete the current upside projection. And let me see. No, we didn't complete the upside projection, so I don't think that one worked out, but our bearish scenario did. So I said for the bearish scenario, right, price could form SMT around previous day high. That is where we form SMT at, around previous day high. Deliver bearish displacement lower, targeting midnight price, the daily open, and the session lows, and we did just that. Rejects from the 1 hour. I said another possibility is that price first completes the current upside projection. Okay. Let me see. Rejects from the 1 hour fair value gap overhead, in which we did, and then begins to move lower. Right on. This was sent out at 9:09. Okay. So again, like I always say, y'all, it starts with a clear projection, a clear head first. Like, let's talk about psychology a little bit, right? A clear head, a clear mindset, knowing exactly where we need to be, what the order flow is, having ourselves in alignment, and then making that move and executing. That's it. Before I move forward with the next day, anybody got any questions? Y'all picking up what I'm putting down? Y'all picking up what I'm putting down? Because I'm going to show y'all some stuff at the end of this session, and it's going to blow y'all mind, and we're going to make money tomorrow, okay? That's all I'm going to say. All right. Give me a second. Let me get some water. Don't we love some money? Don't we love some money? I'm telling you. Look, we mentor each other. Like, we really like that for real. But I promise y'all, I said I was going to wait the next week. But until I saw what I saw, how market ended today, and what I saw, oh my God, this going to blow y'all mind. And we going to make money tomorrow. I promise. Okay? If the market can put us in alignment and we just follow what we need to follow, and we just pay attention and be patient, let the market do all the bull crap that it do, we gonna be ready at 9:30. Period. Right? We're gonna be in and out the markets before 10:30. Right? Okay. So, Wednesday. Let's get into Wednesday. Let me turn these market executions off real quick. Okay. Wednesday. Midnight price. Let's start off with midnight price. This is what we want to be marking up every day. Midnight price here. Okay. Let me see if it's something. Where is it? Something I'm missing. Okay. So Tuesday around 12, okay, we finished off this projection, okay? I'm not saying that every time a projection is finished that we catch a reversal, but it is likely, okay? It is very, very likely. So Tuesday, we move into -4 standard deviation. We get a reversal, okay? We get this reversal right here. Let me see. Let me drop down to my 5-minute, because if I'm not mistaken, there was a projection back up here to this upside, right? Once a projection is finished, we have another projection, especially if there's a reversal, okay? So we're gonna use first distribution leg, and let me see. Let me go back to my 15-minute. Where is it at? Okay, right here. So Tuesday, okay, we got another projection to the upside, right? -2 aligned with the weekly open, us bringing us back into the weekly open. So again, what do I always say when we're below our targets? We can aim back to that way. Those are our draws, right? If price has reversed, it is now turning bullish. Our projections are to the upside. That is what we're using our standard deviation to project, okay? So using this first distribution leg here, right? Peep how -2 aligns perfectly with the weekly open. This weekly open is this line right here, right? -2, -2.5. We get that pullback. We give a retap, right? We give a nice retap back on weekly open, right? And we move into the cap of the range, -3.5, -4, right? Not only that, price like, hey, I ain't get enough of that, right? Midnight price opens right here, okay? Let's even go back. Let's mark out the daily open too. Let's pay attention to the daily open. So 6 o'clock. 6 o'clock was right here. Okay. Right. So moving a little bit forward. Let me put on the SMD. Okay. Asia choppy. Everything kind of like choppily just moved down. Okay. Around 7:49 midnight. I mean, not midnight, but pre-market just a little bit. We catch a move back up. Okay, even retap back on weekly open. We say, hey, we ain't finished. We want to come and finish. We want to come and finish off this projection a little bit more. Okay, and we move into this 15-minute gap. Paying attention to this 15-minute gap. Okay, this 15-minute gap is our drawn liquidity. I'm gonna tell you why. when PRAs that we want to see be respected are aligning with our projections, in this case here for our draw on liquidity, because we can't just spot a draw on liquidity. Like, I remember, like, a while ago, before I really got to this point, I was marking all type of levels. I was marking numerous. I would be marking 1,000 different demand zones, fair value gaps, and it was just so confusing because I'm like, which one is price gonna likely draw to? But when I learned the market maker model and I learned these projections, and I sat back tested, right, when it aligns, okay, with your standard deviation, that is the draw on liquidity that you want to use, okay. And notice how, again, right here in the middle of negative 2.5, negative 3.5, right, we finish off this projection at 10:30 a.m. okay, coming back into our levels, coming, retesting, reclaiming midnight price, right, the daily open, and finishing off this projection, right. Now let me hop back into, let's see what we gave for the daily bias. I'm not sure if I gave I didn't give a daily bias, but anyways, let's just play it. Let's just see what we have here. Okay. So 9:30 gave us this retap, right? And we move back into this. Okay. What do we see here? We see our 15-minute fair value gap. Okay. Now we're just waiting on a what? A CISD. Okay. This is this 15-minute CISD, right? We have another 15-minute gap inside of a 15. Let's drop down to our 5-minute now. Drop down to our 5-minute, okay? Notice how the 15-minute CISD, right, and the 5-minute CISD aligns. Where could we have been in at? Honestly, I would have been in off the CE. I would have been in right here off the CE. Okay. Stop loss at daily open. We've already came in, tap daily open. Even before that, finished again. It rinse and repeat. We finished off our projection. There's no need for us to be nervous about this, right? Stop loss is clear. Our drawn liquidity is clear. We got our CISD. We got our reversal. Okay. What are we targeting? Well, first we could have targeted 52. Nice, cool 52. That's literally a 1-to-1 ratio, right? Smacked them for 52 points right here at midnight price. What do we have next? We got weekly open. Back to the weekly open. Okay. What do we got next? Our session lows. Right. Look how we move nicely back down. Right. All of this, literally all of this. You know what I'm saying? So again, rinse and repeat, y'all. Drawn liquidity. And again, I can't stress it enough. We don't want to just be spotting out any just any little drawn liquidity. We want to make sure that drawn liquidity makes sense, because if it makes sense, it's gonna make money. Okay. So again, the 15-minute fair value gap was that drawn liquidity for today. This is where price got that nice dump. Okay. Not only that, we got a projection as well. We could have played off of this leg here. Okay. That first distribution leg. Okay. First distribution leg. Look how we did -2, -2.5, reaccumulation, a jab higher, right? Rejecting off this 5-minute, right? This 5-minute supply, then boom, finishing off the -4 standard deviation, and going even lower than that, right? Boom, boom. Any questions about this? Before we move forward? We good. Right, sis? I'm telling you, bro. It's like, oh my gosh. It's a rinse and repeat. Rinse and repeat. Price just giving it out. Okay, so that's that for us right there. Okay, let's get rid of this. And let's go ahead and move into today. No, my bad. What was we at, y'all? We did Wednesday. That's what we just left off at, right? Correct me if I'm wrong. We just left off on Wednesday, because we did Tuesday. Okay. I'm trying to kind of get through this a little bit because I want to see what 8 o'clock got going on. Okay, Thursday, and I sent out a bias for that day. Okay, so Thursday, midnight price. Midnight price. It already got it mapped out for us right here. I need to go to my 1 hour for this real quick. All right, so we already know one thing that I was paying attention to. Let me go back to my 15 minute. I was paying attention to, let me see, Tuesday's low. I don't even got it on there. But anyways, y'all, this is Tuesday's low. Right, our previous day low. Right, and this is going into Asia. Okay. I'll tell y'all why Tuesday's low was an important low. Something I've been paying attention to that we're gonna get into is rejection blocks. Okay, rejection blocks. Rejection blocks. W SMT today with ES. Yes. Right. So NQ came into this rejection block, and in rejection block, let me just break it down. It's wick base. That's all it is. That's all it is. It's wick base, but it gotta be significant. It gotta be pressure. It can't just be a wick. Okay. So what made this so significant is what Maya just said. It caused us to put an SMT in. Okay. In which, what you see here, ES came and took this low. NQ failed. This is how we kind of got that continuation of today. The move had already started that night. Okay, so SMT here, rejection block, right? Asia opened us up pretty nice, pretty bullish. Okay, what do we do here? All right, we get a drawback in the whole day. What did this 15-minute gap end up being? Somebody tell me what this 15-minute gap ended up being for our day. For our day today, what did it end up being? What did it end up being for us? Yes, sir. Yes, sir. I draw on liquidity. That's right. And it's that simple. We don't care about nothing that happened in Asia. We don't care about none of that. That happened to be our draw on liquidity. Yes, every time, right? Anyways, let's go. Let's come back down here. Let's give this, right? First distribution leg, okay? It's not a last manipulation leg because NQ didn't manipulate this low. We got a last manipulation leg on ES right here, in which I have marked out. But for NQ, if we're trading NQ, this would have been the first distribution leg. Now I know a lot of us have a lot of issues with first distribution leg and last manipulation leg. Y'all understand how this was the first distribution leg and not the last manipulation leg because we didn't manipulate Tuesday's low or this low at all. Okay, perfect. But manipulation leg on ES, correct, because ES came and took that low. Yes, correct. Right. So again, right, around 9 o'clock, this 10 o'clock candle open. Right, 10 o'clock candle open. We had already manipulated it at 10:30. We manipulated it at 10:30. Now let me show y'all something too. All right. Nah, let me move. Let me go ahead and show this. All right. Let me mark out this daily open. That's one thing that we forgot to open. Look at this. The daily. Okay, this is our daily open. I'm paying attention to this as open, low, right? Our high, and we closed here for the market. Simple. That's it. We manipulated this daily open. right? We manipulated this daily open. We got first distribution leg. So again, like I said, that gives us an open, low, this high that we put in right here, close. Moving a little bit forward, okay, we tap back into this daily open. We create this 15-minute fair value gap that we come into, and then this is where midnight price leads us into, okay. Moving on up, we get clear accumulation, market open. What do we manipulate back into? Our drawn liquidity. We manipulate back into our drawn liquidity. And then what do we get for the rest of the day? That distribution, right? We take out -4 standard deviation. We take out previous day high right here. And we dang near making our way back on to all-time highs. Simple. Simple, y'all. Simple. Simple. Right? Where we were, I mean, my bad, I said that all wrong. But where were our targets at? Our targets were above where we needed to go, right? Midnight price. Watch how we came to -2, -2.5, reaccumulated. Again, manipulation of these lows, taking these lows, and then that push higher, right? Targeting, opposing liquidity, going back to the upside. I'm paying attention to this 1 hour fair value gap. I'm not gonna lie, it's a drawn liquidity. It's been a drawn liquidity before. We have projections that align with it. I'm paying attention to it, right? Simple. So it was very choppy. Let me go ahead and read the bias. Okay. This is what we said for today. Said last night, price formed SMT at the lows, okay? Failing to take Tuesday's low. Mind you, this was sent out at 8:43, right? Which provided a projection to the upside. Here's that projection to the upside, right? Currently, price is trading below the weekly open and midnight price, which keeps short-term bearish pressure in play heading into NY session. With this current context, we got two scenarios. Our bullish scenario was if price reclaims the weekly open, delivers strong displacement, we could target the 15-minute fair value gap, right? And potentially see an inversion that supports continuation higher into previous day high. This was at 8:43 before any of this played out. Let me mark out this 15-minute fair value gap that I'm telling you about. Let me also mark out previous day high that I'm telling you about as well. Boom. That's it, right? I called this inverse of this 15-minute fair value gap. I called it. And we did it nicely. Not only did we just inverse it, but we respected it. We came back, tapped onto it, right? We did a nice break and retest of previous day high. We broke previous day high, retested 15-minute fair value gap. Nice clean push higher, okay? All of this right here be noise. All of this, it was noise. I ain't gonna lie, I took a trade. I think I took a trade. It's all about patience though. Let me drop down to my 1 minute and analyze this here. Let me see. I called a continuation trade, honestly. And then what did I used this rejection block right here that I was paying attention to. I used this 1 minute rejection block that came back into this 15-minute. Right? Look what we tapped perfectly. CE. Anytime I'm using a fair value gap, I'm using CE. My stop loss. Right there. Right. What do we target? This 15-minute gap. 15-minute gap. Right. For the continuation though, right? I was noticing this, right? I was literally like, it was this one. I'm sorry. It was this gap right here. Off continuation, right? Because for me, the way I was looking at it, it wasn't an aggressive entry. I literally had set a limit for it. In the video. Literally, weekly open. We came back. We broke weekly open. We came back and retested the fair value gap. A push higher. Clean. When we speak in terms of break and retest, let's make sure that it's a significant level. We just don't want to see a break and retest of nothing. We always thinking in terms of higher probability. When you chase money, you're allowing it to run away from you. Don't chase it. It's gonna come. So anytime I'm looking at a break and retest, I want it to be breaking a significant level, break previous day high for me, come back and retest a 15-minute gap, break weekly open for me, break weekly open, come back and retest a PDRA, a bullish PDRA, push higher for me. That's it. That's it. That's it. That's all. Right? Now let me tell y'all, this the fun part right here. This the fun part. This the fun part. This right here is about to blow y'all mind. Okay? Let's get into it. Now this is higher time frame. We love a higher time frame without the noise. I'm sit it on the chart and I want y'all to spot it out for me. Give me 1 second. Let me take these executions off again. Let me take these executions off. Let me take this off. Okay, so I'm on my 1 hour. No, matter of fact, I need to be on my 4 hour. Right? Let's eliminate the noise right here. Let's eliminate the noise. What do y'all see at these lows? What do y'all see at these lows? Let's go ahead and market prep for tomorrow. SMT. Yes, ma'am. Yes, ma'am. Yes, ma'am. SMT. We prepping for tomorrow. We getting ready for tomorrow before it even happened. SMT. SMT. Yes. Right. So we're seeing the SMT at these lows. Give me 1 second. Let me do something real quick. We seeing the SMT at these lows, right? This 4 hour manipulation. This 4 hour manipulation of the weekly open, right? Came into the weekly open, manipulated it. This is 4 hour. You can see it, right? 4 hour manipulation, right? We can already have a projection here. Now I'm gonna show y'all. Y'all know the 4 hour time frame aligns with the 15-minute time frame. So when I'm setting these, and this is where it kind of gets a little bit advanced, right? Because when we're talking about alignment, right, we want our weekly to align with our 4 hour to align with the 15, okay, so on. So let me show y'all this when I draw out this projection here. This right here gonna bring us back to all-time highs, y'all. When I tell y'all this about to be a good rest of the month, we just getting started. Draw down to the 15-minute. Look how nicely this projection aligns with this 15-minute low and this 15-minute high. This is a range. I'm gonna bring out something else that's gonna blow y'all mind. I don't want to put too much, right? But when we're talking in terms of equilibrium, what is this 50% align with? What is this 50% align with? Midnight price. Midnight price. Midnight price. Yes. Yes, ma'am. Alignment. Alignment. That's it. That's it. We just want alignment. That's all. That's all. But anyways, okay. There it is right there. We want to see continuation. Continuation. That's it. We want to see this bring us all the way back. We want to see this thing bring us all the way back where we need to be, right? Negative 1.5 aligning back up here with these highs. Okay. If price can wipe out, just like how that ES candle did, they said it was a glitch and all of that, and we've seen it happen before. Not the glitch with ES, but like with MNQ, we've seen 2 days erase a whole month of work. Y'all don't think we can move back to this can bring us back? This literally can bring us back. Okay. So I ain't looking for nothing. I don't care about no shorts. I don't care what price doing right now. I want to see price move into this 1 hour fair value gap, reject off of it one more time, okay, and give us a push higher, a continuation, right? So all in all, what I'm saying is I'm looking for Asia and London session to give us that pullback. 9:30 manipulates whatever manipulates. London session before pre-market can manipulate, and I want to see that continuation higher in that order. In that order. Leaving Friday off for a good banker for a good week. Let's see clear accumulation, manipulation, and distribution. That's it. We got a higher time frame supporting it. You can already see this 4-hour working its way up. We are inverting this 4-hour for value gap, right? Hey, I could even see something like this. Retest. Right? I can see this. I'm not saying that we're gonna finish this whole projection tomorrow. Price could. Price could. But again, y'all, what do I say about a projection if we don't finish it within that range? If we don't finish it, it's gonna finish it. It may be today, it may be tomorrow, it may be next week or whenever. We'll finish it. It's gonna finish. Okay. Last but not least, let me see. Homework review. I'm gonna go ahead and do homework real quick. I'm gonna do homework before we go ahead and hop off. Let's see. Everybody good so far? Everybody good so far? Let me see. Jay, what's up? What's up? I'm glad you. I know you made it in a little late, but that's okay. If we need to hop on a one-on-one call, we can do that tonight if you got time. But I also recorded this session, so I'll be uploading it. So you know how we do. That's okay. That's okay. That's okay, sis. It's okay. Yes, I have to get with you later for my questions. Good. D said good. Lucky said we good. We good. Okay, last thing we gonna do, y'all. Homework and assignments. Let me see. This was Tuesday's homework, right? Tuesday's homework was find 2 examples this week of liquidity sweeps and real market conditions. Okay. For each example, it was to recognize, right, identify what liquidity was swept, was S&T present, was there confirmation, what was the drawn liquidity, did the sweep lead to a reversal or a continuation, and what lesson did you learn from the setup? Okay, so Maya dropped hers in the chat, and we're gonna go ahead and cover Maya's. I'm trying to see the best way to do this with this being over here and this girl. So this is what we'll do. This is what I'll do right here. Okay, this is the best way I know how to do. But I'll show y'all. Okay, so give me 1 second. Oops. Oh my goodness. Hold on, y'all. Bear with me. Bear with me. Okay, there we go. All right, making sure y'all can see that clear. Okay, so this was, here's the example here. Okay, y'all can see this. Let me know if y'all can see this. Make sure y'all can, let me know if y'all can see everything on my screen, because I can't double check it right now. Yes, you can see. Okay, perfect. Okay, so this is Maya's example right here. Okay, it says the first question: what liquidity was swept? She said 4-hour liquidity into the 4-hour fair value gap. Okay, This 4 hour fair value gap right here. Okay. Was SMT present? She said there was no SMT here. Was there confirmation? She said yes. Okay. It looks like confirmation to me. Here's the 4 hour fair value gap. Also where previous day high is aligning. Reversal. Okay. What was the draw on liquidity? Okay. Her draw on liquidity was the most recent low. Okay. We got weekly open down here, previous day low and previous week's low. Maya, correct me if I'm wrong with how I'm seeing this, because so far everything looks solid to me. Okay, you said yes, it was technically 2 and 1. The one you're talking about right now, then the other suite where that line W W X is. Okay. Got you. I got you. Okay. The next question was, did the sweep lead to a reversal or continuation? Right. It led to a continuation. Let me go to the next picture. Are we on this picture yet, or are we still on the first one? My bad. I was wondering, should I just bring you up so you can explain it? But I don't want to put you on spot if you don't want to be on spot. But if you want to request to speak, you can speak because this is your work. Okay, I see what you're saying. You just broke it down on a lower time frame. Yes. Okay. So this right here. Okay. Got you. Correct me if I'm wrong again. This is her 4 hour. Okay. This is her 4 hour that she's breaking down here, and this is the continuation that she said it led to. Okay. Now the next question, it says, what lesson did you learn? What lesson did you learn from the setup? She said that I learned that I need to be patient for the last sweep of liquidity and not be liquidity. AMD and stop hunt setup is bread and butter, but need to be patient and allow it to happen first with continuation, not just quick drops. That's correct. Also, she said, I wanted to see it come up to equilibrium, okay? And it started dropping right before. So I got in, but I knew that I wanted to see it tap into discount before I was interested in this trade. So just trusting my intuition more and not getting in until the trade screams at me. That is correct. That is correct. So this a banger because she got all her confluences. Okay, she got liquidity sweep. Okay, SMT don't have to be there, right? If applicable, always when we're speaking in terms of SMT, because we can have a reversal without an SMT and it still plays. We can go off rejection blocks, we can go off order blocks, right? We just want to have that extra set of confirmation. Okay. She had her confirmation. Okay. Drawn liquidity, that most recent low. Okay. Price drew into, right? And we got that continuation. Okay. So it was clear. It was clear here. Okay. That was her first one. That's tough. That's tough, Maya. That's tough. Okay. Here is the next one. Give me a second, y'all. Let me put this one out here. Perfect. Let's see how I'm gonna do this. Like that. Boom. Okay. Alright, let's bring this back up. Alright. This is the second example here. Okay. Okay, it says liquidity was swept to the downside and upside, but was looking for shorts of most recent low before seeing reversal, but can't force what you see. Okay. Was SMT present? She said, honestly, did not look. I appreciate the honesty, right? But should have, because yes, there was, okay? And that would have told me to get out shorts a bit earlier or be cautious, okay? ES took most recent low and NQ did not. Was there confirmation? Yes. Tapped into -2 standard deviation, SMT, inverse fair value gap right here, y'all, right? Stop hunt at the bottom. Yes, right? Yes. What was the drawn liquidity? Equal highs. Okay. Did the sweep lead to a reversal or continuation? Reversal. Right? We swept into this -2. Reversal. What lesson did you learn from the setup? Here we are. This is her breaking it down a little bit more here too. Okay. What lesson did you learn from the setup? Same as before. Patience and waiting for a liquidity sweep, but also being okay with not finishing out the projection and taking profits when unclear. Okay? If we finish out projection. Period. That's it. That's it. Maya, that's what's up. That's what's up. That's what's up. That's all I gotta say, gang. That's what's up. That's what's up. Okay, so y'all, I did homework too. So let's see what I'm talking about. Let's see what I'm talking about here. No, I do a whole lot of talking. Okay, let's see what I'm talking about. Okay, here's my example here, y'all. 1 hour fair value gap. Again, we went over this example for Tuesday because again we were looking for 2 examples from this week so far. Okay, that's why we give market a little time to prep, and we cover homework from Tuesday on Thursday. Right. So anyways, this 1 hour fair value gap again was our liquidity. Okay. Was SMT present? No SMT there. Was there confirmation? I said yes. Price drew into the 1 hour fair value gap. Okay. And displaced lower, inverting a 3-minute bearish fair value gap. Okay. This 3-minute is a little tight in here, but this 3-minute fair value gap right here. Tapping back onto the 1 hour. Nicely tap back onto this 1 hour, right? And continue lower. Again, accumulation, manipulation, distribution. Okay. When we're manipulating, y'all, we're not just manipulating anything. Okay, just like when we're doing a liquidity sweep, we're just not sweeping just anything. Okay, we're sweeping liquidity. Right. I just wanted to say that before moving a little forward. Okay. Next question was, what was drawn liquidity? Right. London lows was a draw. Okay. Asia lows. Previous day low further down here, and our major one. Right. Our major one weekly open. This is a great example of where I talk about. Most times when we hit -4 standard deviation, we can get a reversal, but not all the time we do, because we may have, to the left-hand side, we could have had more resting liquidity down low. We could have went back to last week's weekly low and took last week's weekly low, even though it had nothing to do about right now, but it's still liquidity, right? Liquidity is all over the markets, okay? My lesson was to always be sure to stay patient for all executions, confirmation prior to executing. Be aware of context shown on higher time frame and lower time frame. That's my take on that first one there. And then let's go ahead and cover this second one. Okay, let's cover this one right here. This one's a little bit more clearer for us here. Okay. The 15-minute fair value gap here. Again, same example. 15-minute fair value gap right here. Is what liquidity was swept. Okay, this was our liquidity that was swept here. Was SMT present? Look, I threw a little example in there that gave a SMT. Okay, this was our SMT at these highs. Okay, was there confirmation? I said yes. Price drew into the 15-minute fair value gap. Created that 5-minute CISD to the downside. Retested the 15-minute fair value gap for a continuation push to the downside. What was drawn liquidity? 3-minute fair value gap. And let me clear this up right here too, because I'm saying usually the 15-minute fair value gap is our drawn liquidity, right? that was at the upside, right? So that was external liquidity, okay? Now we also have external liquidity. I draw on the other side, drawing to our targets. So I don't want to confuse that for y'all. Drawing liquidity is drawing liquidity, period. Okay, drawing liquidity is targets. Targets is drawing liquidity. That's where price is going. Okay. So we said I drawn liquidity was the 3-minute fair value gap. Okay, that is clearly aligning with -2 standard deviation, and London lows down here was a drawn liquidity as well. Okay. Did the sweep lead into a reversal or a continuation? Well, it led into continuation because we continued lower and we did finish off this -4 standard deviation. Okay. My lesson that I learned and took from this setup was when there's SMT within a key level, okay, pay attention to that part. When there is SMT within a key level, the setup becomes higher probability. Okay. Be sure to wait on a CISD displacement. Okay, in our displacement was the CISD. Basically, that was our displacement. Okay, or you could have said a gap. Okay, I'm sure there was some type of gap in here that we displaced through. Okay, because price was one sided. So if price is one sided, that means there is imbalances, there is gaps. Okay. And that distribution. Okay, always be sure on the draw on liquidity before executing. Okay, always be sure on the draw before executing. And that was it. I have opened up. I have opened up everything. So our calls. This is just my giveaway. Okay, I love to teach. I love to do what I do. And most importantly, I love doing it with y'all. Okay. So I have opened up our weekly sessions. My people that's in the IFM, they didn't feel no type of way. They love it. Okay. So if they like it, I love it. I have opened up all my weekly sessions Sunday, Tuesday, and Thursday to the free community. Okay. All I need y'all to do is just show up and be there. We ain't bull crapping. This is real. This is market structure. This is what we do. And today I just want to throw out there, because I'm usually not used to giving myself a tap on the back, but I want to give myself a tap on the back today because y'all, I took my first live trade today. And talking about the feelings of that was high. So talking about psychology a little bit before ending this call. Okay. We're only responsible for keeping our emotions intact. That's all we're responsible for. Before even coming in these markets, executing, even before understanding what is going on. First thing is being responsible for keeping our emotions intact, no matter what turns out or no matter what happens. That's it. So I'm proud of each and every one of y'all. I don't know all of y'all personally. I maybe not have seen a lot of y'all personally. But I just want to say from me to you, I'm proud of y'all because y'all know this is not easy. It's foreign. And one day, all of us, every single last one of us, all 6 of us in here right now, we picked up one day and said, we gonna just learn. We just gonna go. And I made a post earlier on Facebook, and I was just like, I just feel like God just was like, hey, he handpicked me, handed me the torch, and told me to just go. Just go. Just start. Just do it. Don't worry about it. Okay? So, we all got here, and we all here for a reason. Okay? I'm going to close this off with just saying a good trader doesn't just trade. Okay? A good trader reviews, we adjust, and we come back sharper. After losses, it don't matter. We come back sharper. Okay? And tonight was just all about learning from the week, so we can execute better next week. Okay, we still got tomorrow left. So no matter what happened this week, okay, no matter if we blew accounts, I blew accounts. I blew every single fund that I had, and I only had 2, but I don't care. I don't. Because truthfully, everything that we've went through, it happened for a reason, and it's built the inner person in us that is not disciplined, right? Not expecting growth. It's growth within it all, okay? And so again, I'm proud of y'all, and I appreciate every single last one of y'all joining tonight. I'm gonna get this call finished up, posted up, and it will be sent out shortly.